Good evening. This is the post-market recap by AGI Era. Today is Tuesday, February 10th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a nuanced battle between bulls and bears, with a slight defensive tilt emerging in the broader market. The S&P 500 finished the day down 0.33%, settling at 16,941.81. Technically, the index is now trading below its previous close, indicating a minor pullback from recent levels, but still holding above the psychological 6,900 mark. The Nasdaq 100 also saw weakness, closing 0.56% lower at 25,127,639. The Dow Jones Industrial Average finished higher by 52.27 points, a modest 0.1% gain, closing at 5,188.14. Crucially, trading volume today was elevated for the S&P 500, with over 2.43 billion shares traded. This implies that today's moves, particularly the selling pressure in growth names, were accompanied by significant institutional participation, suggesting a higher conviction behind the price action rather than a mere lack of interest. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, data was not available at the time of this recording. However, the sector performance provides a clear indication of shifting sentiment. We are seeing a clear divergence in sector performance. Money flowed noticeably into utilities XLU, which gained a robust 1.69%, while technology XLK lagged significantly, dropping 0.56%. This rotation indicates that Wall Street is positioning for a more defensive stance, favoring sectors with stable earnings and dividend yields over high-growth technology, potentially signaling concerns about future economic growth or a shift in interest rate expectations. The spread between these two sectors today tells us that investors are favoring safety and value over aggressive growth. The macro engine room. The primary driver of today's moves can be traced back to the broader macro environment, particularly currency markets. The 10-year Treasury yield data was not available at the time of this recording. However, the bond market remains a critical barometer for equity investors, and any significant shifts in yields would directly impact interest rate-sensitive sectors. Meanwhile, the U.S. dollar index is marginally higher, up 0.05% to 96.74, as traders brace for a deluge of upcoming economic data. This slight strengthening of the dollar could create headwinds for multinational corporations with significant overseas earnings. Crude oil is trading around 64 cents, down 0.31% on the day, responding to ongoing supply-demand dynamics and global economic outlooks. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech. NVIDIA finished the day down 0.76% at $188.59. Microsoft closed down 0.08%, while Apple also finished down 0.30%. Other Magnificent Seven names also saw pressure, with Alphabet dropping a notable 1.77%, Amazon MDM down 0.87%, and Meta losing 0.96%. The notable outlier was Tesla TSLA, which bucked the trend, finishing up 1.89%. The widespread weakness in this group, with the exception of Tesla, is notable because it suggests a broader reevaluation of growth stocks in the face of defensive sector outperformance and an elevated trading volume. This could be a sign of profit-taking or a rotation out of crowded tech trades. After-hour look ahead. Looking at the after-hours tape right now, shares of Aploven Corp are moving significantly, up over 3.08% in extended trading, indicating potential positive news or analyst upgrades. As we pivot to tomorrow, the calendar brings us a continued focus on economic data. Investors should specifically watch for upcoming economic releases, as the market narrative has highlighted their importance in driving currency movements and broader market sentiment. Any surprises in inflation, employment, or consumer spending figures could easily dictate the market's direction. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.